alternative investments is always heightened when the foundations of the bellwethers become rocky. But if history is a reliable guide, art values will continue to be favorably impacted as credit and equity markets lose their luster. In fact, I'd argue that now's the time to take a look at the non-traditional investments like art that have, over time, stood as true stores of value. When making asset allocation decisions, especially in such challenging times as these, just consider the fact that if you'd invested in the S&P 500 10 years ago, your return today would be 0, versus those people who are lucky or smart enough to have invested in art 10 years ago, their return is phenomenal at this point. Going forward, it's likely to be even more difficult to predict positive returns in the stock market, given the fact that over 2/3 of the U.S. economy is made up of the consumer sector. And with growing unemployment, non-existent credit, and sharp declines in the value of people's retirement and investment accounts, it's safe to say that the consumer will continue to reduce their spending, making it increasingly difficult for companies to grow their earnings. Remember that art has a low correlation with the stock and bond markets, making it a great way to reduce overall portfolio risk and diversify return. Far from being a luxury, it can be argued that art is an essential component of any portfolio.